Hello, everyone. Today is Thursday, September 19th, 2024, and I'm Brian Tokuuke, Portfolio Manager here at the Rice Partnership. And I have with me today Orest Saikevych, Chief Investment Officer of the Rice Partnership, who will be talking to us today about the recent market volatility that we've been experiencing in the markets. Hello, Orest.
Hello, Brian. Hello, everyone, once again.
Thanks for joining us. And the first question we have for you today is, what is or are the causes of the market volatility that we've been experiencing over the past few months?
Okay, there's a lot of different reasons. One of them is the economy and the fact that the economy has been moderating. Some people, a lot of investors have been worried that the economy is slowing too fast and that the Fed is behind the curve, so to speak, as far as instituting rate cuts. We just saw our first rate cut yesterday of 50 basis points or 0.5%. So the economy and the pace of the slowdown is one concern, causing a lot of volatility. Also, the election and its swings. It seems like an eternity ago that in late June we had a debate between President Biden and former President Trump. And then after that, everyone was saying, well, Biden looked quite old and should he be replaced? And then there was the attempted assassination attempt on Trump, the first one where he had his ear shot at. Then Vice President Kamala Harris came on the scene to be the Democratic standard bearer, and it caused a lot of volatility there as far as types of trades, the Trump trade, the Harris trade, etc. And so the market was buffeted around by all those headlines. Geopolitical events continued. That also had some effect on the markets, especially some of the commodity markets like oil, like precious metals, gold, etc. So those were some of the reasons why the markets have been quite volatile this summer.
Well, that's really interesting, and those are some good points. We got time for one more question. So when do you think this volatility will end, and what do you think we can expect in the meantime?
Okay, I think the market will be choppy until probably mid-November. There's a number of things still going on. One of them is the election. And of course, the election is November 6th. So that will still cause volatility. Also, there's earnings for the third quarter coming in, and people are going to want to see what companies are saying as far as guidance for the fourth quarter and also for 2025. Although I think the guidance may be somewhat limited because a lot of corporate executives are waiting for the election to get clarity and certainty as far as what to expect. Now, as far as major changes in the economic environment due to the election, I don't think there will be very many unless one party sweeps all three branches of government, meaning wins the presidency, the House of Representatives, and the Senate. I think that's highly unlikely. We'll probably have some sort of divided government, which means gridlock going forward. So overall, we see about a 10 or 12% trading range, roughly 5,000 to 5,700 on the S&P 500. And after we get through mid-November, due to the fact that the market will have some certainty, we should have the traditional year-end rally. Also, markets will be looking forward to 2025 because we'll almost be there already. And the outlook for corporate profits, the economy, and the pace of federal funds rate cuts for next year.
Well, that's about all the time we have. So thank you very much, Orest, for your time and commentary on the recent market volatility that we've been experiencing. And to everyone viewing, thank you for tuning in.
Thanks, everyone. Take care. See you next month.
Awesome.